Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to become a successful swing trader in 100 days. I know it sounds crazy, but is it doable? I think it all comes down to you. And honestly, your drive, your ambition. I love the quote, you are the result of your actions. If you are somebody that's going to watch this video and you're going to implement everything, that I talk about and that I say, and then you're going to go watch more YouTube videos and you're going to take courses and you're going to just invest into yourself, then yeah, I could definitely see you becoming a very, very successful swing trader. But if you're going to watch this video and maybe you're just going to open up an account and go, okay, I'll just start buying stocks, then I'm sorry to say, but it's going to be very, very difficult for you to be a successful, consistent trader. So we're going to be talking about that today. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading, how I find stocks, my strategies, my approach, pretty much everything when it comes with trading, check out our school. We have an awesome sale for 50% off. You guys can use code 100 to get 50% off, which is awesome. We have private live streams, quizzes, lectures, all that good stuff. And it's like a college class. We have a final exam. It's 8 weeks long, and so just invest in yourself. And guys, let's jump into this. So everybody wants to become a successful swing trader. And honestly, you guys watching this video, I will say this, it's going to be very, very, very difficult for you to watch this video and become a successful full-time swing trader in 100 days. But what you can do is implement some of the things that we talk about today. So maybe in a year, maybe in 2 years, you're quitting your job. You have the freedom, to make money, to understand the markets. Don't put a timeline on anything, right? Trading is like any other job, a doctor, a lawyer, an engineer. It takes years of practice and hard work, but you guys can definitely understand the basics with trading in 100 days or less. And honestly, maybe start a small account. All right. So phase one is figuring out what type of trader you are, whether you're a day trader, Forex trader, crypto trader, swing trader. For me, I swing trade stocks. I don't get involved in Forex, crypto, or anything like that. I will trade stocks and ETFs. But your goal for the first 20 days is pretty much to learn how the market works and get a general understanding of how strategies work. Now, during this time as well, I would highly recommend opening up a Moomoo account, which is just a trading broker. So you guys have access to be able to buy, sell, and even do charting and scanning for opportunities. I'll put a link to Moomoo down below. You guys can get up to 20 free stock just by signing up. So click that link and sign up. But taking your first 20 days and just understanding and trying to consume as much knowledge is going to help separate you from other traders. So phase two, this is going to be from day 21 to day 50, is to paper trade and journal. You're going to want to experiment with different strategies and setups to figure out what works for you. Paper trading is a way for you guys to practice your entries, your exits, without risking real money. The great thing about this is it will help you figure out what's working and what's not working so you can focus on what's working. Now, building a strategy honestly does take quite a long time. And so the biggest thing that I will tell you is to focus on and create a checklist. A checklist is a set of criteria that you will use in order to enter a position. At the end of this video, we'll talk about a strategy that works really, really well. And we'll talk about a more recent swing trade so you can understand what I do. So stay tuned for that. Now, during this time, you're going to constantly review your positions and adjust accordingly. Like I said, journaling your trades is probably one of the most important things that I did that helped separate me from other traders, because what I do and what I focus on will change. So I can adjust my stocks, adjust my criteria and my strategy in order to, be consistent and more profitable. Now, phase three is starting small. This is where you start a small account challenge. You fund $50, $20, or even $100 or $200. What you do is you focus on small returns. If you guys make 3% per month, you are better than 95% of all traders in the entire world. So start small, understand the compound growth behind trading, right? Focus on good high reward plays and low risk setups. we'll talk about how I will risk a minimum of $1 to make up to $5 or $6. Now, starting small is really, really important as well, because if you are profitable with a $100 account, you're going to be profitable with a $1,000 account. The only thing that's separating you from making more money after you develop a profitable and consistent strategy is just your account size. So understand that the long-term outlook of trading is super important, because the profits you make today can be used as a leverage tomorrow, so you can compound your account very, very fast. But like always, you just always have to constantly learn, and this is why, some people will watch this video and go, okay, I get the idea, let's start doing it. And some of you may be a little more confused, and that's completely normal. So I'd highly recommend, taking some time and being around some like-minded individuals. So check out our school, and you guys can use code 100 to get 50% off. So click that link and sign up right now. Now that we understand the 3 phases, now let's actually turn to the computer and see one of our more recent swing trades. All right, so this is a stock that we took a position with, and this is RYAM. Now, one of the first things that I have on my checklist is an upward trend. And you guys will notice the stock has gone from like $45 to $75 in about a year span. So it has that good upward trend. Another thing that we want to pay attention to are indicators. Indicators are indicators that traders use to get a general idea of what the stock is doing, so you can, make trades based off previous history. So you guys will notice that we have a variety of different lines. We have the yellow, we have the blue, red, and green. So these are all different indicators. Up top here on the chart, right, up here, these are going to be moving average lines. So the red is the 200-day moving average line, the blue is the 90-day moving average line, and then we have the 50-day moving average line, which is the yellow. The main difference between all of them is going to be support strength. So the 50 is going to be a weaker support than the 90. The 90 is going to be a weaker support than the red, which is the 200. So with the stock selling off all the way down to that 200-day moving average line, that was a really, really, really interesting thing for me, because this could see support. So that's why we got notified, because our scanner pretty much told us. So the next thing that I look at after we know the trend and support is going to be the RSI. The RSI right here was trading for about a 21. The last time it was trading for a 21 was all the way back in here, right in here. And what happened? The stock went from about $34 to about $40 and then up to $42. So it had good buying pressure, which is very important. So you want to get in on a stock that's on an upward trend, sold off down to support line, and is undervalued on the RSI. The last thing that I always want to look at here is going to be earnings. The earnings is next month, so we're in the clear on that. You never want to hold, or at least I don't. I never want to hold a stock through an earnings report, because it's incredibly risky. And what I mean by that is it's like a 50-50 chance of making money. The stock will often squeeze up on good earnings or sell off on bad earnings. And I don't want that. I don't even want to be involved in that. So I always know when the earnings is coming up. I can put it on my phone, alert on my computer, so I just kind of know maybe like a day or two beforehand. So after that, here's I go to a lower time frame. Time frames tell different stories, right? So for me, looking at the hourly time frame, what do we notice? We notice that it has this nice and steady downward trend where it hits this general trend line here. We can remove these, and it just gets sell off, right? It hits it once, twice, 3 times. So now it popped up. With the stock popping up like this is what we call an hourly breakout strategy. So like I said, risk management is so incredibly important here. So what we did is we entered there, keeping our stop loss just below the lower wick down here for a possible push up to resistance, which is at about $75, gives a risk and reward of about 4.68 to 1. So you're risking $1 to make $4.68, which is really, really good. And this is what makes up a successful swing trader, right? This is why I use a trading broker like this. This is why you focus on those small returns, and so, if you're watching this, start small, learn as much as you can, invest in yourself, check out our course, code 100 to get 50% off, and we'll see you guys in there. But that is it. I hope you guys enjoyed it. Take care, everybody.